Welcome back to Investing Talk Podcast. Today we are focusing our analysis on D-Wave Quantum, and we're really trying to get to grips with that core question so many of you are asking. Is D-Wave Quantum a good time to buy now? Before we jump into the sources, please do take a moment to subscribe, like, and maybe drop a comment below. And hey, if you have a specific company you want us to look into for a future analysis, just let us know in the comments. We definitely look forward to hearing from you.
Yeah, D-Wave Quantum. It's a fascinating one. Definitely a high-octane stock. I mean, we're talking about quantum computing here. It's pretty much the definition of a high-volatility, high-growth sector, right? So our objective today is to, really rigorously look through the source material you provided. We'll focus on, let's say, three main things. Those recent catalysts, the big ones that drove the stock higher. Then the tricky financial reality, this contrast between huge growth potential and deep unprofitability. And finally, those specific upcoming events that are likely going to define its near-term price action. We really need to cut through the hype, get a clear picture of the risks and rewards.
Okay, let's unpack that then. The sources are pretty clear that D-Wave Quantum has shown, significant momentum lately. It's been on a tear, really. What specifically drove that big upward swing, that sudden rush of investor enthusiasm?
Well, the recent momentum seems to be fueled by two main things. Some strategic signaling from the company, and importantly, renewed confidence from analysts. Let's start with the signaling part. Back in early September, the stock saw a pretty solid surge. I think the sources said 3.04% in just one session.
Yeah, that's right.
And that followed the announcement. They hired Stan Black as their new Chief Information Security Officer, the CISO.
Okay, I get that a CISO is important, but why would hiring one executive move the stock of a quantum company by 3%? Seems a bit much.
It does seem like a lot, but I think it speaks directly to scalability and, crucially, trust. See, D-Wave is trying to move from being, a niche R&D outfit to a commercially deployed platform. And as they start talking to bigger enterprise clients, government clients maybe, cybersecurity just becomes critical, paramount, really. So hiring a top-tier CISO, it signals to the market, hey, we're maturing, we're getting ready to handle sensitive, large-scale data.
Yeah.
And that validates their commercial path. It was a kind of psychological boost the market needed.
And that psychology, it looks like it translated into some pretty serious price action. The sources mentioned they hit a new 52-week high around then.
Absolutely did, yeah. Investor excitement peaked around September 24th, pushing the stock up to that new high, $27.99. And importantly, this wasn't just, retail traders jumping in. The institutional backing was really crucial here. We saw pretty robust analyst support coming through in July and August. Specifically, you had multiple Wall Street analysts either initiating or reiterating buy ratings. Firms like Rosenblatt Securities and Canaccord Genuity, they came out strong. They set some aggressive price targets, too, ranging from $20 all the way up to $30. And, when established firms slap a $30 target on a pre-profit quantum company, that generates massive positive feedback loops in the market.
Okay, that sounds like a strong vote of confidence, sure. But isn't some of that institutional confidence just standard noise? The sources also mention inclusion in top-tier quantum computing ETFs. Isn't that just passive index tracking? Where's the proof institutions are truly buying the story, not just the sector index?
That's a fair point, a really critical one, actually. ETF inclusion does mean passive money flows in, which helps the price, no doubt. But the fact they're securing spots in these top-tier specialized funds, it does show a certain recognition of D-Wave's legitimacy in the market. It kind of signals to institutions that, okay, this sector is real, and D-Wave is a key player. And this legitimacy, it's sort of reinforced by their global strategy, too. They're not just looking at North America. Their expansion into, say, the South Korean market, which is highly technical through that academic collaboration with Yonsei University, it proves they're actively building those commercial pathways and credibility internationally.
Okay, but here's where it gets really interesting, right? And where maybe we need to inject some serious skepticism. We see all this market excitement, the momentum, these aggressive analyst targets. But what do the underlying fundamentals, the balance sheet, actually show about the financial health of the business itself?
Right, and this is the core tension. This is what defines the stock and why it carries such a high-risk premium. You've got this massive, potentially transformative growth potential, but it's contrasted so starkly with deep, persistent unprofitability. The sources show this dramatic projected revenue acceleration. That's the bull case, basically, in a nutshell.
How dramatic are we talking? Give us the numbers, the ones that are justifying all this hype.
We're talking exponential, the kind of growth you'd sort of hope for in a brand new market like this. Consensus estimates, they project revenue jumping from what? About $8.83 million in 2024.
Which is pretty small, yeah.
Right, small base. Jumping from that to a projected $25.04 million in 2025.
Wait, hold on. That's a huge leap.
It is. That's a massive 183.7% year-over-year increase in revenue. Projected, of course, and the projection train, it doesn't stop there. They anticipate further growth to nearly $40 million, $39.05 million in 2026. So this data suggests or hopes that commercial adoption of their quantum tech is maybe hitting an inflection point, leading to this really aggressive revenue curve.
Okay, that is certainly a powerful argument for the future potential, no doubt. But the reality right now, specifically looking at that recent August earnings report, it showed something much more sobering.
Exactly. That August report really highlighted the financial gap. While revenue growth was solid, 40.9% year-over-year increase to $3.1 million, they missed the EPS expectations, reported in $0.08 loss per share. And the crucial data point here, the one that really anchors the risk in this stock, is that no analyst, currently anyway, are forecasting profitability before 2029.
2029.
Yeah, we are talking about potentially 5 years of anticipated unprofitability already baked into the current projections. The projected EPS for 2025, even with that triple-digit revenue growth we just talked about, it's still a loss, minus $0.23.
Wow. 5 years of losses. That's practically a lifetime in the public markets. Why are investors, why are analysts willing to tolerate such a deep cash burn for so long?
Well, because the potential payoff, if it hits, is potentially astronomical, right? They're funding fundamental R&D for an industry that could literally redefine computation. So the market tolerates this cash burn because, basically, they're paying the R&D bill now, hoping for a slice of that massive future quantum market. The analogy, maybe it's like building a nuclear reactor. It costs billions before it produces a single watt, but the long-term output could be transformative. And there's one positive financial sign, a kind of beacon in all this red ink efficiency. They reported a continued strong gross margin, 82.5%.
That's very high.
It is, and it's really important because it means when they do generate revenue, the actual cost of delivering that service is low. So if they can solve the scalability issues, if they can ramp up sales, that 82.5% margin suggests the long-term profit potential, post-2029 could be immense.
Okay, but since profitability is still, half a decade away at best, this raises a really important question for anyone holding the stock now or thinking about it. What does this mean for cash flow? And maybe more importantly, the risk of share dilution.
Yeah, this is arguably the biggest near-term risk. Because the company has these massive R&D costs to fund. I mean, they're building incredibly expensive, cutting-edge hardware. They are basically entirely reliant on external capital, which means they will likely have to keep raising capital, either through equity or maybe debt. And for you, the shareholder, every time they issue new equity, well, it's like a small tax on your ownership, isn't it? Your existing slice of the company pie gets just a little bit smaller.
Dilution, right.
That's the risk of share dilution. And given their reliance on capital, this risk is persistent. It's high. Plus, the detailed balance sheet figures that are available in the sources, they're a bit limited. That's pretty common for emerging tech, but it makes it hard to precisely calculate their current cash runway.
Meaning how long they have before they need more money.
Exactly. How many quarters until the next capital raise becomes, pretty much inevitable. So investors really have to proceed with caution regarding their cash position.
Okay, so to really understand D-Wave's valuation, we need to understand their tech, which you mentioned is highly specialized. What makes them unique compared to, say, the more general-purpose quantum systems being developed by competitors, IBM, Google, even some of the well-funded startups out there?
Right. They're a first mover, but in a very specific subfield known as quantum annealing hardware. This is a really crucial technical distinction. It defines their competitive position and, frankly, their risk profile. You can think of the overall quantum computing field as having sort of two major paths right now. Most of the big competitors, like IBM you mentioned, they're focused on what are called gate model systems. This is the path aiming to build a universal general-purpose quantum computer, something that could solve, theoretically, any type of problem, kind of like your laptop does now.
And D-Wave, they took a different path.
D-Wave chose specialization. Quantum annealing is highly specialized for basically one thing: optimization problems. So imagine really complex logistics, simulating drug interactions, finding the absolute fastest delivery route in a constantly changing network. D-Wave offers a commercially deployed platform that handles these specific high-value optimization tasks exceptionally well right now. They're like the specialized tool, while the gate model systems are still trying to become that general-purpose machine of the future.
So that specialization is their advantage today,
Yeah.
but it's also their biggest risk, isn't it?
Oh.
I mean, if those gate model systems eventually catch up and become efficient at optimization too, doesn't D-Wave's niche just evaporate?
Precisely. That's the core stock-specific risk right there. D-Wave is dependent almost entirely on the commercial viability of quantum annealing versus these alternative approaches. If the gate model systems prove superior or maybe just more broadly applicable sooner than expected, yeah, D-Wave faces a pretty steep risk of technological obsolescence. And this specialization brings us right back to the financial question. How long can they keep funding this niche approach while these other, potentially more powerful technologies are racing ahead?
Okay, let's pivot then to the near term. Investors aren't just looking at the long-term tech race. They want to know what concrete events might move the stock over, say, the next 3 months. What are the key milestones we should be watching?
Okay, yeah. Looking ahead, we have 3 major institutional and earnings events circled on the calendar. These are likely to inject some high volatility. First up, mark October 10th. That's a major ETF quarterly rebalancing date.
Right, the passive flows again.
Exactly. These are kind of automated institutional events, but they can drive significant volume based on index changes, inclusions, or exclusions. Second, and this is probably the big one, October 28th. That's the Q3 2025 earnings release. The market will be scrutinizing this report. Did they hit those aggressive revenue growth targets? Did the profitability outlook change at all, or is it still stuck way out in 2029? Expect massive volatility around this date.
Okay, earnings are always key. What's the third one?
And finally, on November 15th, we get the Institutional Holdings 13F filings. Now, for anyone unfamiliar with the 13F, it's a mandated filing. It shows exactly which major investment institutions, the big funds, the hedge funds, bought or sold the stock during the previous quarter. This filing is crucial because it reveals where the so-called smart money is actually putting its capital, not just what their analysts might be recommending publicly.
Right, actions speak louder than words sometimes. Okay, so beyond those hard calendar dates, we know these kinds of high-growth, high-potential stocks are often driven by market chatter, by speculation. What are the key rumors swirling around D-Wave right now that might be driving interest?
Yeah, the sources mentioned 3 kind of persistent rumors that seem to be fueling some speculative trading. First, there's heavy chatter about a potential collaboration, specifically with a major US-based cloud or AI company.
Like an Amazon, Google, Microsoft type.
Exactly. A deal of that magnitude, it would signal mainstream integration of their quantum platform and obviously provide a potentially significant revenue stream. Big validator.
Okay, that would definitely validate their commercialization efforts. What's the second piece of speculation?
The second one is about a potential breakthrough demonstration, specifically in quantum AI applications. The thinking is D-Wave might unveil some kind of profound achievement, maybe at a big year-end tech conference, showing how their annealing technology can genuinely revolutionize certain AI optimization tasks. A real proof of concept breakthrough like that would be a massive, probably immediate catalyst.
Makes sense. And the final rumor, M&A is always popular in these emerging tech sectors, right?
Absolutely. Yeah, rumors of M&A activity, they're pretty constant. Larger tech firms, especially maybe ones looking to kind of leapfrog the long gate model development timeline, are reportedly eyeing stakes or even potential full acquisitions of quantum leaders like D-Wave. A successful merger or acquisition, well, that would immediately address their dilution risk and probably provide a huge return for shareholders. But it's also, the most speculative, volatile kind of rumor.
Okay, so let's try and pull this all together. What does this all mean? We've got massive volatility, huge projected growth.
Yeah.
What was it, 183% in 1 year?
That's the projection, yeah.
A strong gross margin, 82.5%. But then zero profitability for years, possibly up to 2029, and this severe dilution risk hanging over it. How did the sources kind of synthesize the overall investment thesis here? What's the bottom line?
Well, the analyst consensus, and it's clearly buoyed by those big growth projections, is overwhelmingly bullish. The sources say 83% of analysts surveyed recommend a strong buy. But, and this is a big but, that bullishness is heavily, heavily tempered by uncertainty. You see this reflected even in the technical analysis. While, yeah, technical indicators might suggest an uptrend, the stock's RSI, the relative strength index, it often flags potentially overbought conditions.
You mean it's run up too fast, maybe due for a pullback?
Potentially, yeah, suggesting the price might be rising too fast compared to its fundamentals. And just look at the 12-month price targets from those analysts. They have an exceptionally wide range. It spans from a downside target of just $12 all the way to an upside of $33.
Wow, $12 to $33. That's a huge spread.
It's enormous. And that extreme dispersion, it perfectly encapsulates the significant risk and uncertainty surrounding this company's future. Analysts generally agree it's volatile and has potential, but they just cannot agree on whether it's ultimately worth $12 or $33 right now.
Okay, let's quickly summarize the fundamental pros and cons then, just pulling directly from the source material for the listener.
Sure. Okay, on the pros side, you've got that exceptional projected revenue growth. You have a strong bullish consensus among analysts for what that's worth. There's that high gross margin hinting at potential long-term profitability. And importantly, that first mover advantage in specialized quantum annealing hardware.
Okay, and the cons.
On the cons side, number one, no clear path to near-term profitability before 2029. Persistent high risk of share dilution because they constantly need capital. Extreme volatility, obviously. And that fundamental reliance on a specialized technology that still faces the risk of being leapfrogged by those general-purpose gate model systems. And this leads directly to the analysis's final conclusion about the investment horizon. Basically, the stock seems best suited for short-term momentum trading. For anyone looking at a long-term investment, the analysis is pretty clear. It's highly speculative. It requires a very, very high risk tolerance, given what they call a high probability of a binary outcome.
Binary outcome. Meaning?
Meaning it's either massive technological and commercial success, the kind that justifies this huge valuation and risk, or it's significant failure, maybe technological obsolescence, leading to substantial capital loss. There seems to be very little middle ground predicted here.
Right. And that idea of a binary outcome is really what you, the listener, probably need to internalize most here. This whole sector is experimental. It's incredibly capital intensive. So the question for you is, can you stomach that potential 5-year path to unprofitability based on a technology that, might even be obsolete in 3 or 4 years? How should you factor in that high capital cost of quantum development, just the sheer expense of building these complex systems when you're comparing that long-term vision against the very real near-term cash burn? Finding the balance there, that's really the key to assessing your own risk tolerance for something like D-Wave. Definitely keep tracking those key dates we mentioned, especially that ETF rebalancing on October 10th, and crucially, the Q3 earnings release on October 28th. It'll be fascinating to see which catalyst, positive or negatives, plays out next. Thank you for joining us for this look into D-Wave Quantum. We'll be back soon with more investing talk.